Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good to have you back on.
Happy to be here.
Stocks on Wall Street ended lower last Friday, in part because of these renewed tensions with China. This week, though, we'll be getting the growth figures for the U.S. economy in the second quarter. What's the story in the global markets and your outlook?
Okay, well, the stock futures seems slightly up, so it might be an optimistic week. On Friday, the U.S. companies are also having their earning report season, and about 128 of S&P 500 companies reported earnings, and while they have reported that their earnings have fallen 40% from a year earlier, also 81% beat analysts' expectations. So things are bad, but not as bad as analysts expected. And it's not as bad as fourth quarter of 2008 when earnings went down by about 69%. So far, earnings seems to be down about 40%. So that might be feeding some optimism into the stock market in the United States. There's also some hopes that U.S. government will extend their fiscal stimulus and unemployment benefits. They're due to run out at the end of July, but the Congress is finally trying to extend those acts, and there are rumors that there might be another $1,200 payment to households, so that is feeding into the optimism as well. And if you look at the unemployment reports for the May, June, and April, the unemployment figures were not as bad as economists expected. So the second quarter GDP may be better than analyst expectations, though third quarter may be worse than analyst expectations because the lockdown is returning. But still, these factors may feed into the U.S. stock market, and it might be a slightly optimistic week this week. So Dow and S&P, they've continued falling from Wednesday to Friday. NASDAQ has fallen all last week, but this week they might be going up slightly. On Europe, even though the Eurozone finalized what may be an historic plan aiding all members of the Eurozone, the market had a very bad week last week. Both FTSE and Euro 50 fell since Tuesday. Asia, China, most Asian stocks fell on Friday because China-U.S. Trade friction, the closing of the consulate in the United States and China. But today, a Chinese stock market, the Shanghai market, seems to be doing slightly better because, well, their reports of industrial profits for June seem to have risen by 11.5% year on year. But the Hang Seng index fell slightly today, and the Nikkei fell slightly also.
Now, Korean stocks were significantly higher today. Tell us about that and what was driving the trade here in Seoul.
Okay, well, for Korea, the individual investors sold today while the institutions and foreigners bought stocks. Now, the Korea is also beginning its second quarter reporting season. It'll last until August 15th. Most Korean firms tend to report toward the end of the legally required period, so we'll see a lot more at the beginning of August rather than right now. But still, about 30 firms have reported so far, and about two-thirds have reported fallen earnings from last year's second quarter. That was expected, but also about two-thirds of them reported that their losses are not as bad as expected, like the United States. So that might be feeding some of the optimism as well. Kospi has been rising somewhat unsteadily, but still rising for the last month. It gained 0.79% today. It almost, but not quite, erased the losses that were made on last Thursday and Friday. Kosdaq had a smoother upward trend last month. It rose 0.81%, and that erased what loss they had on Friday.
Well, we're almost out of time, Professor, but coming up in the week ahead, what's on your radar?
Okay, well, domestically, there's a consumer and business sentiment index, but what's catching most people's attention is government plans to what to do about Seoul area housing. They're supposed to report how they're going to increase the supply of housing in the Seoul area, so that's going to take most of the attention. On foreign statistics, the U.S. FOMC is having a meeting this week, but because U.S. interest rate is already at 0%, interest rate is not much of a mystery. It can't fall any further unless U.S. decides to go minus, and that's not going to happen. But what alternate monetary policy they're thinking of, that's going to catch a lot of attention.
Got it. All right, Professor Young, thanks so much for coming on today. Appreciate it.
Thank you.